Eric Sprott, Rick Rule, and Keith Neumeyer are three successful resource investors coming together for one simple reason: to buy cheap assets from distressed companies and seize this once-in-a-decade opportunity to buy gold, silver, and other mineral projects for pennies on the dollar. First Mining Finance Corp., trading on the TSX Venture under FF, a recently launched venture with the sole purpose to acquire advanced stage natural resource projects, and starting on day one with 18 projects, management has already identified over 60 additional projects to acquire. Learn more about First Mining Finance at futuremoneytrends/InvestRight.
When it comes to the U.S. dollar, and over the last year, we've seen the U.S. dollar do relatively well against the rest of the world, devaluing their currencies. How long can this go on for, and what are the consequences of the rest of the world doing this to such a large extent for so long?
Well, the dollar story over the last year is kind of interesting because coming out of the last crisis in 2009, we had relatively easy monetary policy, and because of that, the dollar was relatively weak compared to the euro and the yen and several other major currencies. So that gave us the benefits of, in effect, winning a battle in the currency war. We were able to price our stuff relatively cheaply and sell it to the rest of the world, and we did relatively well. I mean, we didn't roar out of the Great Recession, but we held our own compared to these other economies who had stronger currencies. Well, they began to see themselves drop into what looked like it was going to be a deflationary recession, which could have easily turned into a depression, in Japan and Europe. So they have had to aggressively devalue their currencies. And so we allowed the dollar to go up versus the euro and the yen. And in fact, we took one for the team. We allowed those guys to devalue versus the dollar, which is to say the dollar went up in value. And that allowed them to stabilize, but now we're suffering. The U.S. economy is slowing down dramatically. By a lot of measures, we will have zero growth in the first 6 months of this year. And that means we're the ones now in danger of dropping into a deflationary recession, from which it's going to be hard to get out because we have so much debt. And it's in so many places that we don't necessarily know about now. The derivatives market is going on $2 quadrillion notional value. Nobody knows where all that stuff is or who has what exactly. And total debt in the U.S. is rising again, and a lot of it is really dicey paper. It's student loans, a lot of which are being defaulted on already. It's subprime auto loans, which are no more secure than subprime mortgages were back in 2006, 2007. So, we've got a lot of debt that can blow up on us. And oil patch junk bonds. There's a lot of paper out there that in a slowdown in the U.S. would totally blow up and bring down their specific sectors, which would then spread to other sectors of the financial system. And the guys in charge know that. So they're terrified of a recession at this point, after we've already taken on all this debt and interest rates are already at record low levels, because normally in a recovery, the central bank of the recovering country will raise interest rates in order to build up some ammo. In other words, if interest rates are kind of high, they have the ability to cut interest rates to stimulate the economy going forward. Well, we're dropping into a slowdown, which could be a recession, with interest rates at record low levels. So what do we do then? We have to that is the question. Can we go way negative? That's the new theoretical question. Can an economy function with interest rates that aren't just zero, but negative 2% or whatever? The big theoretical question now is, can we have a functioning global economy with negative interest rates? And the old theoretical answer to that was no, because there's this thing called the zero bound, beyond which if interest rates go negative, everybody takes their money out of the bank because nobody wants to leave money in the bank if it's going to cost them money to have a checking account or a savings account. So you get all the money, all the cash being sucked out of the banking system, and the system grinds to a halt. So therefore, you can't have negative interest rates. Well, we're finding out that that's not necessarily true. Some places have negative interest rates all the way out to 5 or 10 years on government bonds, and people are still buying those bonds. So now we're in a new theoretical era where we're trying to figure out how low interest rates can go. And a lot of places are responding to these falling interest rates by looking for ways to ban cash. In other words, you can short circuit this whole zero bound thing if you just don't let people use cash. If everything is electronic, your only way to buy and sell is with a bank account or credit card, then if the rate is negative, you just have to take it because you aren't allowed to take a stack of $20 bills and go buy a car or whatever. You just can't do that anymore. And as crazy as that sounds, that idea is spreading. The war on cash is in high gear right now with several countries and a lot of prominent economists actively looking for ways to make cash either really inconvenient to use or flat out illegal. So that's the next stage in the process. And there are so many dangerous aspects to the war on cash that we could do a whole show just talking about all the bad things that flow from a society that bans that kind of private transaction.
That's amazing. I mean, negative interest rates, who would have thought? And I actually really hope that doesn't happen because, I mean, as it is, it's hard enough to get people to save and to encourage people to save. And if that happens, it'll just be even worse. And, that, of course, just adds to the unsustainability of the bubble that we're facing. And being 7 years away from the last financial crisis and, into the quote unquote recovery, we're due for something. And as you said, there isn't much ammo left, but I would hate to see what would happen if we didn't go into a negative interest rate environment. But I wanted to move over into Bitcoin. Do you see Bitcoin as a viable alternative currency in this environment where there is this war on cash, as you put it?
Well, I think the jury's still out on Bitcoin in particular and cryptocurrencies in general. It's a fascinating idea and very possibly one future for money. But it's not clear yet whether a cryptocurrency like Bitcoin is a force for good. In other words, a way to allow people to transact that bypasses the whole fractional reserve banking fiat currency system, and therefore is a force for individual freedom and against big, powerful, overwhelmingly controlling government. Okay, on one hand, or is it a means for those very same governments to control us because they can track our Bitcoin transactions and hack our accounts at will? And if and there's no FDIC insurance on a Bitcoin account, right? So if the NSA raids your account, takes all your Bitcoins because you're doing something that they find politically objectionable, like voting for a libertarian candidate or lobbying for a scale back in mass surveillance, there's no recourse. Your money's just gone. And so it's not clear how this shakes out, and it's not clear what is and is not possible from the point of view of the NSA versus these fiat current or these cryptocurrencies. So we'll find out over time. But right now, I think the jury is still out. So I would call Bitcoin a fascinating idea that hasn't yet proven itself to be robust enough to exist as a form of money in this world. It's a store of value. It's not like gold buried in the backyard or in a secure vault where it's there. If it's in an online wallet, you don't really know it's there. Or if it's on your hard drive, your computer can be hacked and it can be cleaned out. And so it's right now it's an interesting transaction mechanism, a payment system.
It is amazing being able to transfer wealth instantaneously without any restrictions or anywhere you want around the world, and then liquidate and purchase, which is a great alternative, especially for countries that have dealt with hyperinflation. I have family in Argentina right now dealing with their bank accounts being shut down and just dealing with the government devaluing their currency, coming out and saying, hey, this is now what your money is worth, and you cannot convert it for dollars. You can't take it out of the bank. You can't take it out of the country. And Bitcoin has been a great alternative for people who are dealing with situations like that at the moment, which I do find very fascinating. And I mean, according to all the people who understand the algorithms and what is going on behind the scenes, because I'm not smart enough to understand how Bitcoin, the network, all works, they do put their endorsement on it, and they say, hey, it's bulletproof. You can depend on it. And if that is true, I think there's a lot of potential there.
Oh, yeah. And, the really interesting possible future for Bitcoin and its peers is something combined with gold, where, gold stored in a super safe vault is your underlying savings, in other words, your money. And Bitcoin is your transaction mechanism based on that gold, and there are some attempts at that kind of a hybrid system being built out there right now. And so we will see how it goes. But I find it hard to believe that anything that's online is bulletproof. If the governments of the world and the organized criminals out there who have massive resources and a lot of brain power to throw at this, it's hard to believe that they're not going to come up with some ways to interfere with the smooth functioning of cryptocurrency.
Well, just making it illegal could put a big damper on it, because
Sure.
Law-abiding citizens aren't going to go out and do things and break the law at risk of getting thrown in jail and things like that. And I mean, I think the majority of us don't want to be thrown in jail. So that, to me, is the biggest threat. Them just coming out and saying, hey, you can't do it. So, anyways, John, as far as wrapping up, based on your current research, what is the message that you want people to hear and know right now in 2015?
Well, right now, we should understand that this is not normal, what's going on. We're purchasing financial stability at the cost of extreme instability in the future. And we can't know when it's coming, but it is coming. I mean, all the numbers that are building up right now are absolutely terrifying from the point of view of someone trying to just live their life and save money and keep a good job and all the rest of the stuff that a normal family and a normal person wants to do. Terrifying times coming. So we need to prepare as individuals. We can't stop the political process that's leading us over this cliff, but we can prepare for our own financial safety and that of our family. And that's what we should be doing right now. We should be tending our own gardens and letting the world work itself out and being ready to weather the storm when it comes.
Well, that's great advice right there. John, I appreciate you taking the time to chat with me today. If people want to do more research and find out more about you, where would they go and what are they likely to find?
Well, I run dollarcollapse.com, which is a blog/news aggregation site, which covers a lot of this stuff. And my latest book is The Money Bubble, which is available on Amazon.com and also through a link on dollarcollapse.com, which also covers a lot of this stuff and has several chapters on investment advice that explains how you can rearrange your finances to give you the best chance to get through what's coming.
John, thanks for taking the time today. Appreciate it.
Thanks, Kenneth.